Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Today is Friday and happy Friday. Let's begin by looking at the equity market reaction and what we've experienced in the markets yesterday. Remember, the Federal Reserve came up with another massive bazooka worth over $2.3 trillion. Basically, in a very concise summary, the Federal Reserve is ready to do something which they have never done before. What is that? Buying junk bonds. So the only thing which is left for the Federal Reserve to do with respect to intervening into the stock market is buying directly the stocks, right? And then perhaps there will be a day when we will see that the Fed is really intervening into the markets by buying stock ETFs such as SPY, and I'm sure many of you know about that ETF. It is, by the way, it is available on our platform. Nonetheless, let's go back to the discussion of the equity markets and how the markets performed yesterday. When the Federal Reserve announced its massive bazooka, we saw this massive move to the upside. As you can see on the chart for the Dow Jones, you see this upward momentum for the equity markets, and pretty much the Dow Jones closed still in a positive territory with a gain of over 1%. Now, of course, the case was pretty much the same for the other two indices as well. But remember, we are still very much focused on two different factors. A is whether the Dow Jones is going to move above that weekly 200-week moving average. And secondly, if the S&P 500 index is going to top, or it is going to win the war with the 50-day moving average on a daily time frame. So these are the two factors from the technical perspective that we are really focused on. But yesterday and today, it wasn't about the Federal Reserve, despite the fact that they did take enormous amount of a flashlight. They still became the centerpiece of traders' attention, but it was all about OPEC. So what happened? Let's have a look at the crude chart. You can see as the meeting progressed, we've seen this uptick coming into the market, and the crude oil went well above that 27 mark. In fact, it crossed the 28 mark, as you can see on the chart. But then it was pretty much buy the rumor, sell the news. That played out perfectly because the OPEC committee, or the cartel, introduced the 10 million barrel cut. But despite that fact, we've still seen this massive plunge in the oil price. In fact, the WTI not only crossed below the 24 mark, in fact, it crossed for a brief moment below the 23 mark as well, and then spent most of its trading most of the trading session was in between 23 and 23.50, as you can again see on the chart. So today it's about G20 energy meeting, and that is the main event for today. Of course, what OPEC has said that, okay, we are here to introduce a 10 million barrel production or cut, and then most of that cut is predominantly taken by Saudis and Russian, but they also want non-OPEC countries such as US, Canada to also join in curtailing this supply or draining that supply from the supply equation, right? So that is the entire focus with respect to G20 meeting. Now, OPEC has made its point very much clear. They've said that, okay, we are not going to accept the organic cuts. What are the organic cuts? These are those cuts which are done through CAPEX, and it is very much priced into the market, or it is expected in the market, that the US isn't going to introduce natural cuts like how OPEC has curtailed its supply production. What they are going to do is that because of the lower prices, it is anticipated that the US is going to reduce its production by 2 million barrels. But again, that is only a natural price cut, because where the price is there, it is not something which is organic, meaning where they'll come and they'll say, okay, we are going to squeeze those taps, and now we're going to cut the production cut. With respect to the economic numbers, at 1:30 p.m. UK time, we are going to get those US core CPI numbers. The forecast is for 0.1%. But my concern is if inflation is still the primary mandate for the Federal Reserve, because right now they are too busy in printing money and pumping more liquidity into the market than inflation. That's all for today. Stay safe and remember to protect yourself, and you can do that by taking AvaProtect. That's all for today. See you guys tomorrow.